What's going on, everybody? Q here from Hyperstocks. Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to cover some other notable names on the market such as Apple, Nvidia, Tesla, AMD, Meta, and Amazon. But before we jump into these charts, levels, and price targets, we have to talk about some key economic reports that happened last week and some things that are happening this week that may help markets back towards all-time highs or force them to pull back even lower. So let's go ahead and get started with the first and most important thing that happened last week, which was the release of the Personal Consumption Expenditures Price Index, otherwise known as the PCE report, which happens to be the Federal Reserve's preferred inflation gauge. So the Federal Reserve watches this report closely in order to decide if it's appropriate to raise or lower interest rates. Now, as you know, inflation has been the biggest battle for our economy over the last 2 years. And 2 years ago is when the Federal Reserve decided to start raising interest rates in order to battle that inflation. Current interest rates are as high as they have been over the last 2 decades, and they are hurting economic growth, which was something that the Federal Reserve had stated when they began their interest rate hike cycle. They stated that 2 things can happen, which was slower economic growth, which will help ease inflation, but they also stated that unemployment could rise above 4%, which is something that we saw happen on the last unemployment reading. We hit 4%, which was the first time we hit that number in about 2 years. Unemployment and the labor market will be in focus this week, so make sure you're paying attention to those numbers. On Friday, we will receive the latest unemployment rate, which is once again expected to come in at 4%. Now, this is not alarming just yet, but the fact that our GDP is starting to plummet to its lowest reading over the last 4 quarters per last week's report, and the fact that unemployment is beginning to rise, it shows that the Fed's interest rates are beginning to take effect. However, if they keep interest rates high for too long, then they risk our GDP falling into a negative territory, which ultimately risks a recession. So with that being said, the market is nervous, and although the numbers came in better than expected on Friday for inflation, we are still riding in an uncertain event, especially at all-time highs, and especially as we gear towards the election. Now, you may be wondering, why did the market pull back on Friday despite the good number? And that's likely because of the first ever presidential debate that we have gotten this year, which left markets more uncertain than ever before. Both Trump and Biden expressed serious concerns for American voters and investors that have left markets a little uncertain about what path can go forward, which could explain why we saw this pullback happen on Friday after the release of that presidential debate. And so that covers all the economic events that happened last week. And for the most part, what's happening this week? This week is not very eventful. We do have some Federal Reserve members speaking, but nonetheless, because it is a shortened holiday week with Wednesday being an early close and Thursday being fully closed, we expect volume to be lower, and the biggest mover for us could be on Friday with the release of the unemployment rates. Now, with all that being said, let's go ahead and move into our charts, starting off with SPY on the daily chart. So we always like to start off with SPY because it gives us an idea of what's happening in the overall market. And we always like to start off with the daily chart because it gives us an idea of what's happening on the overall macro picture. But keep in mind that last week we actually wrapped up the full month of June. So with that being said, we're going to zoom out to the monthly candle to see where the overall month closed. And we can see that June's monthly candle closed above its all-time high mark that was created in the previous month, which is an exciting thing. However, when we look at volume, we can see that volume has been declining month over month as we head higher, which is an alarming sign for buyers and could signal that we can expect a pullback this month. Now, when we zoom in even closer, we can see that SPY's daily candle on Friday closed below its 10-day moving average for the first time in quite a while. The last time it closed below it, you can see it quickly recovered, but buyers were still unable to attain that level, and it closed below with very strong selling volume, indicating a potential pullback coming this week. Now, if you are expecting that pullback, and if we do get that pullback, here are some supports to focus on. The first support we have in place is going to be at 541.60. If SPY cannot hold that level, then we can fall towards the 538.87 support. And unfortunately, below that level, we don't have much support till about 531. So we can definitely see a full-blown sell-off if there's any negative catalyst to the market. Now, if we do get that sell-off, we are not turning fully bearish unless we break below 531.30. That's when things can get ugly very quickly and we can fall towards 522. But remember what we said earlier, this week is a shortened holiday week, which means that these numbers might be a little aggressive to hit this week. So make sure you guys are checking back in so we can update you guys on these levels in the next video. Now, the next stock on our watch list is going to be Apple, which also suffered a dramatic pullback on Friday that forced it below its 10-day moving average and forced what we know here as a bearish engulfing pattern, which is when a full day engulfs the previous day and it's a red day. And this is a very bearish pattern. It could signal a full-on trend reversal. Now, when we zoom into Apple's hourly chart, we can see that the stock has also been making lower highs over and over again since it reached that 220 mark, which means that Apple could be on the verge of a full-blown pullback in the coming weeks. And here are some supports and resistance points that it's facing. First and foremost, if it can break back above the 214.83 resistance, then it can force itself back into a more bullish and attractive territory. But for now, it's looking like Apple is starting to lose that grip on the 200 level, and it may give it up in the coming weeks. Below 205.50, Apple does not have much support because this move was nearly vertical, so it will be very easy to fill this gap if it breaks below this support and move back towards its bearish level. The next stock on our watch list is going to be Nvidia. Nvidia, although it is the sweetheart on the market right now, we hate to say this, but the stock is displaying some weakness and some bearish tendencies, especially with it forming what is known here as a bearish flag. Now, apart from the fundamentals on these companies, we do believe that their fundamentals are healthy, but overall they are a bit overpriced. Nvidia in specific is generally overpriced. For now, the market is expecting a lot from this stock, but nonetheless, the market is starting to realize that $3 trillion may be a little expensive for this stock for the time being. With that being said, if Nvidia does pull back even further, it can pull back below the 122.60 mark, then it would fall towards 115. Now, 115 happens to be the support that CNBC, Bloomberg, and every other news station that you can think of has been pushing to be Nvidia's strong support, which makes us believe that if Nvidia does test that support, it may try to bounce at it, but we will not buy it because we actually expect it to pierce right through 115 and fall further towards 107, assuming that it breaks below these supports in the first place. Now, if you are bullish on Nvidia and you want it to go up, of course, you need it back above 130.70 in order for buyers to regain any kind of strength. But ultimately, they need to break out above 141.09 in order for them to move towards the all-time high mark once again. The next stock on our watches is going to be Tesla, which had a phenomenal week last week. It is no surprise to us that Tesla rallies during a time in which the market pulls back. This is a classic Tesla scenario where everybody thinks it's about to sell off with the rest of the market, but the stock actually rallies, and it managed to actually move towards its 200-day moving average, a level that it hasn't seen in over 6 months when it broke below it. Yes, it got rejected just below that point, but there's still hope that the stock can still rally further if it breaks above that level. So if you're looking at Tesla on the short term, your primary support coming into this week is going to be the 191 mark. This is the level that it had gotten rejected at tremendously before, and it finally got that breakout above it, which means that it needs to hold it in order for buyers to hold their position. Otherwise, they risk falling back into the same consolidation range, which buyers won't be too happy about. The next resistance in place outside of the 200-day moving average is going to be right around the 206 mark, which is right around that 200-day moving average is 206.23. Above that level, we expect Tesla to move towards 217 to 218. But remember, these are pretty aggressive price targets, so make sure you guys check back in. Tesla may not be able to hit them this week, so we will update you guys on future videos. If Tesla loses the 191 support, buyers aren't going to be too happy, and it can easily fall towards the 176 to 177 mark. The next stock on our watches is going to be AMD, which has been extremely choppy recently. Every single time the stock has tried to rally, sellers have come in and pulled it back, which makes us believe that AMD may be due for a further correction along with other semiconductor stocks. On the daily chart, AMD has over and over again been rejected at its 100-day moving average. So that means if you are watching the daily, you need to focus on that 100-day moving average. If AMD can finally break above it and hold, then it can potentially rally. But as long as it's below this level, then it's unlikely to rally. Here are some levels to focus on AMD in the short term. First and foremost, our resistance remains the same as it was last week as 174.55. That's the level it needs to break above in order for it to move to one of these price targets. And to the downside, which we are leaning more bearish than bullish on the stock strictly because of their extremely high price to earnings ratio and inflated number. When we look at AMD's financials, we can see that their price to earnings ratio is about 10 times higher than the average healthy 25 reading. AMD is reading a price to earnings ratio of about 233 and a market cap of 262 billion, which we believe is extremely overvalued for such a company. AMD's downside support is going to be 149, and if it breaks below that level, considering the fact that it has consolidated here for months, that level break will be extremely bearish and it will send it towards the 133 to 135 mark. The next stock on our watch list is going to be Meta, which tried so hard to break out above all-time highs last week, but the stock just could not hold, and it actually ended up giving up the move by Friday to close out the week. If you are watching Meta, here are some levels to focus on. Meta's first resistance in place is going to be 523.21. The way we derived that is we simply looked at where it got rejected last week, which you can see it was here, and it sold off tremendously after that. So you need a breakout above that level in order for buyers to restore confidence, and ultimately it needs to break above 531.49 in order for it to rally towards all-time highs. To the downside, Meta is still bullish above the 492.40 support, but if it breaks below, then buyers are not going to be happy to re-enter this consolidation zone that it took months to break out of. So if they do break back into this consolidation zone, a lot of buyers are likely to give back their positions and send it back to one of these supports. The next stock on our watch list is going to be Amazon, which had a phenomenal week. It actually reached a new all-time high, but it fell just short of that 200 mark, which is going to be the same resistance we have in place for it. So Amazon reached a high of 199.84 before getting rejected, which makes that our resistance and focus for it to break out. Now to the downside, its breakout support is going to be 191, and the way we derived that is because Amazon got rejected here, pulled back, and when it broke back above, buyers are not going to want to see it break back below this level, or else they're going to give back their positions and force it back to one of these supports down here. So that wraps up all the stocks that we're going to go over this week, and also wraps up all the economic reports. Thank you guys so much for checking in. Don't forget to subscribe and like.